Hi, this is Kirk with Forex Strategy Secrets. Today we're going to be discussing a topic, we call it hotlines. This is a power tool. It's the #1 power tool we use for serious traders. Now this is going to be sharing with you one of the indicators we use. What are the hotlines? Well, they're just moving averages. We named them hotlines. What are the hotlines used for? Well, here's a few things that they're used for. Direction of the trend, which way is the market moving? The start, when that trend starts, when the trend is coming to an end, and sideways markets, and coming out of a retracement, and continuation of a trend, when the trend hesitates and takes off again, and the strength of a trend. So these are the things that we can all pick up from this one little indicator, and it's very powerful by itself. When you see it used with everything else, you really get a glimpse of the power of what you're viewing. So what we're going to do right now is go to some charts. These are the two moving averages. I'm going to tell you what they are. You can find them in the Jumpstart strategy on the website and webpage forexprofitclassroom.org is where you can find it right now under Jumpstart. So the yellow one is, you can write this down, it's a 3 simple close. The purple one is a 5 shift 1 simple close. The color's not critical. Other than that, those are the colors that I use, and if I refer to the yellow one crossing the purple one, then that's what it means. But you can use any color you want. Okay, so what we're looking for is when the yellow line crosses above or below the purple line. That gives us the direction of the trend. Now these are not long, massive trends where you're waiting days and months to see a big trend. This is where we're looking at 1 hour trends, but we're going to use the 15-minute as our entry point. And so we'll look at the 1 hour, 30, and 15. So I'm going to put a vertical line right here. This is just showing what it looks like on the 1 hour. So I'm going to move it over just a little bit as to when right here we start seeing it come out, break out on the 1 hour. Now there are, in combination with other indicators, this is even becomes stronger. Right now we're just showing the concept of how powerful just this indicator alone is. So let's go right to the 15-minute. We've found the direction. We're looking to trade long. So what would we be looking for? We're looking when the 15-minute is going long as well. And it passed, we'll put the price bars on a little bit, but it passed right in this area right here. So if we go up, the exit signal is, for this illustration, there are many other exit signals, and this is a combination of one of my favorites, is when it crosses back below the purple line, when the yellow crosses below the purple. So there's about a 25 pip move, just based on these lines right here. And we'll just go through in a minute and show you how we may want to consider trading clear up in here. So there's a good between 30 and 40 pips that could be made on this whole trade. You can either get out and get back in, or you can just stay in. So what I'm going to do is draw a box around this. Okay, this is on a 15-minute, so it shows a retracement. Now let's look at that on a 30-minute. See, the 30 minutes not quite as long. It comes down and back up, but let's look at the 1 hour. See, the 1 hour hesitates. It doesn't even come back down. So if you just stayed on the 1 hour, it would have given you the possibility of trading up to here. So you need to be able to know when to exit a trade. And like in this area, is this really a turning point, or is this just a hesitation and a continuation? So we've talked about the start of a trend. We started on the 1 hour and again on this 15-minute. Now we talked about the end of a trend. Well, if you're looking for a few quick pips, right here, 25, 30 pips you could have had right on that move. And it only took you about a couple of hours is all that would have taken. And the sideways market. Now, we didn't really talk about getting into a sideways market because we don't like to trade those. But we're talking about coming out of a sideways market. So this would be your sideways market right here. So when you see this type of thing happen, that's when you want to be looking for a breakout, long or short. You have to determine which way it's going to go. We call this a braided pattern. When you see a braided pattern, don't get frustrated, get excited, because you know that's going to break out, and that's where your move takes place. And so this would be coming out of a retracement. It moved, it retraced. This is a retracement or consolidated. Then it took off again and continued the trend. Now, how do we tell the strength of a trend? Let's go back to this 1 hour. Look how the line has opened up. Right in here, it's opened wider, came back, so you could see that it was starting to lose some of its strength, and then it went up, had a big surge right here towards the end. Come down. Now right here you can see how strong it got. Now you don't want to start entering a trade right down in here. You want to catch it here, and then it gets stronger as it goes in your direction, either long or short. Now, this is what I want to do now is put on the price bars. Okay, this is the same indicator, same everything that we've seen before, but now we put price bars on. So now, what would I be looking for? This is a 1 hour chart. I'm looking for when this crosses again. So I can be looking right in this area. I don't have to wait until it totally crosses. Just when it starts going across, that's when I want heads up. Then I'm going to go right to the 15-minute. And that's when I'm looking for an entry. And I'll show you what I would be looking for in an entry on this. See where we saw this braided pattern? We call it braided because the lines are intertwined with the price bars. These are two swing high areas, a couple of swing low areas. So when it's breaking past these swing high areas, that would have been one possible entry, but an earlier entry would have been this is a swing high as well, right around this area. The 15 minutes said that's a potential area to get in. It goes up, it hesitates, goes sideways. And then when it crossed, then this would be a place you could potentially consider exiting the trade. What about re-entering the trade? Over in here, it passed the swing high again. You get in, it didn't really move very much, but the hot lines are still good. This is on a 15-minute. Okay, now I'm going to mark this whole area right here, this whole trade, and we're going to go back to the 1 hour. The 1 hour, see how the price bars went sideways a little bit of a retracement. It came back against you about 14 pips, but you're still well above where you entered the trade. And right here, it came back down and back up, so this would give you a good solid exit signal right here if you just use the 1 hour. Now, let's see whether we would want to have stayed in that trade based on a 30-minute. This is where the other indicators will come into play. And I'll show you the full course material, a screenshot of it, and we'll look right at this area and see if you would have wanted to stay in based on some additional information that you might see. So now, so what we want to have you do is write down any questions you have, because we're going to open it up at the end for questions. We can come back and look at these charts, we can answer questions, whatever would be comfortable for you, to help you just grasp the concept of what's taking place with just this one indicator and how powerful it is. Right here is one of the safest trades there is. It comes out of a move, it comes in a retracement and takes off again. Not necessarily the biggest trade every time, but it's one of the safest trades. It went up, consolidated. This is another pretty safe trade right in here. So this whole area was a great trade, place to trade. Now I'm going to leave these bars on and go back to the 1 hour. Now let's look between the price bars and look at the hot lines. Well, here's a potential trade right here. Sideways, then it went down, sideways. See, that wasn't as big. And the market goes sideways a lot, so you just have to learn how to read it. But these vertical lines right here represent, that's 1 day. This is the opening of the market. So this happens to be a Monday, and this is today. This is current chart right here. So I'm going to go back here, and let's just look at this area over here. Do you see anything similar to what we've already gone through? We see moves down. We see some side move or corrective moves. Down, this is actually a retracement. Then we see it crossing again. So clear up in here, you don't have to wait till clear down here. Clear up in here, there was an entry. That was like 80 pips. So I'm going to highlight that one area. We're looking back in history. I'm trying to teach a concept here, not there's other ways we can show you how to trade right when it's active. So I'm going to put this anchor and move it right over here into the middle of this area. Then I'm going to go to the 15-minute. So this is the area we're looking at. See what this 15-minute did? It opened up. It's really easy to read. And there was a good 50-60 pips there. Do they happen all the time? Yes. Do they happen all the time, every day, on every single currency pair? Not necessarily. This was not very good this day. There was a pretty good move over here, a good move here, some good moves these couple of days, and so probably 4 out of the 5 days on this currency pair this last week, there were some pretty decent moves. Now, so what I'm going to do is go to a different currency pair. I'm just going to go down my list here and scroll, and we're going to be staying right in the same area, same time frame on this other currency pair. You see some moves that could be happening right here. So the point I'm going to get at here is maybe not every currency pair is moving every day. That's why you want to learn to use indicators so you can trade which pairs are moving during the day. Here's another little tip that I'm using to trade the pairs that move the most. All the pairs move, and I've traded every one of the pairs, and successfully. But these pairs are the ones that move the most. Aussie yen down to the US yen. Now you don't need to write these down. I can tell you with probably a 90% accuracy that you could actually pick these out. So the thing you need to listen for is anything that has the euro in it. See all these euro pairs? Anything that has the pound in it. And the other thing that I'm looking for are the things that have the yen in it. So those 3 currency pairs, if it has a combination of those in, those are the ones I'm trading. The only one that I've put in that's moving pretty well is the US CAD. Now you should be able to do that if that's what you wanted to trade those things. The reason I picked those is because they move the most. I can't trade all of the pairs, but I definitely can trade more than 1 or 2 pairs because they may not be moving that day. But I know that many times there'll be several of these pairs moving at the same time. I can take several trades on those. And you can see the example of just using these time frames. Now, if you want to trade longer term, let me show you what it looks like. You know what these look like. I'm going to go to a 4-hour chart. That doesn't look much different than the 1-hour chart, other than it's just longer time frame in between. So you could use the 4-hour, 1-hour, 30-minute, or 1 hour, 4-hour, 1 hour, and 15-minute as your signals as far as trend, what you want to get into. Trend is based on what hot lines cross, up or down. That gives you the direction. The strength, how far apart are they? Yes, see, it goes up and down right in here. And then a sideways market. Well, these sideways markets, I'm not going to go through it, but right here, that was a 100 pip move right there on that 4-hour chart. So right in here, there might have been a possibility of, let's go look at it. I haven't even looked at this. See the 1 hour possibly, but let's look at the 30-minute. See, now I started to see a clean move here. Now it's for 50-60 pips. So you can use several different time frames to trade with. Now let's go back to the pair we first started out with. This is where we first started. Now what I'm going to do here, I'll put that line, this is our anchor right in the middle of that area right there. So I'm going to go to, I'm going to show you the whole full course material. Okay, here's the course material, and this is the area that we were looking at. Remember where it's going sideways right in here, and it crossed, went up, came back down, and up. Okay, look at these additional indicators that help you to see what's going on. These are swing highs we talked about. They're marked right in here. There's a good heads up there on this 30-minute chart. Let's move that to the 15 because that's where we were entering. This is the 15 chart, still passing above those fractals. So right there, that swing high, could have gotten an entry signal right there. Now you see another exit signal up here. The first one is the hot lines crossing. The other one is that indicator changing colors. When they both do that at the same time, That's a signal you should be considering exiting. And there are some other exit signals on here, but they're like if you missed that one and wanted to get out, then the next one would come up also. Let's go to the 30-minute. We're just looking at this area right here. This 30-minute. See, this didn't make as big a retracement, and it showed you another good entry signal. This is almost late for me. The early one would have been right over in here to go up. So you got the hot lines and a color of an indicator, and it went up another 20-30 pips, but the exit signal would have given you, at least on this 30-minute, at least 15 pips. So you see how these other indicators help you to possibly stay in a trade when you get to many things telling you the direction to go. So let's go back to the webinar slideshow. So we've just gone to the charts. Now we're going to scroll down here. The hotlines are a foundational part of our nth degree proven trading system, and I showed you how they're there. So when you go into our course material, right now everyone here has access to our material called the Jumpstart Strategy. The hotlines are half of that strategy, and there's another webinar that we'll be having that will show the other half, and you can watch that in your videos. You can go in and see how it's working set together. I'm showing you how they work separately, and then we put them together. The degree proven trading system is where you can learn how the hotlines work with other indicators. Now, so what else is there in this nth degree trading system? You have the hotlines. We've gone through those, but they're entry signals, better entry signals than just the hotlines. Exit, blue light special, that's one of my favorite setups. 5-alarm trade, saddle buy, saddle sells, that's another favorite. Use of different time frames, how to trade while working a full-time job, early bird signals, how to trade a sideways market. But you don't trade the sideways market, you trade coming out of the sideways market. How to grade a trade, how to use off points. And here are some of the trading strategies and other tools that you'll find. There's a leg 1, leg 2, how to create a watch list, how to sweep a trend, a camelback, candy bar, candlesticks, zone trades, mega trades, Fibonacci course. All these things are in part of our course material so that you can really be in tune with what the market's giving you. So what else is there? Well, that's a lot. There are 21 trading labs. Well, what are these trading labs? They are the answers to questions that people had about the course material. And so we created 21 specific webinars, 20 to 40, 30 minutes each, about answers to questions in specific areas of the course material. 3 acceleration coaching webinars. So we had an additional 3 webinars showing people how to get up to speed quickly. And now we have the 50 Pip Club. We're offering a 3-day pass to our 50 Pip Club. Why do we call it a 50 Pip Club? We're figuring that most days, not every day, that if people come in and just follow the 5 or 6 traders that they're hearing call out trades, that if they just copied those trades, they would generally be able to make, the goal is 50 pips. Sometimes they might make 20 or 30, sometimes even 10. But the point is, many times they can make the 50, and we're giving you a pass to come and watch that take place. And so you can ask for your copy of our Jumpstart Strategy, if you don't already have that, and a 3-day pass to the Pip Club by sending an email to jed@forexstrategysecrets.com. And now then you can have access to look at the hotlines in the Jumpstart Strategy. Review that for yourself. I told you what they were, but you can see them once again what they are. And then ask for your section. We'll give you a link to 3 days, and then you can come in and watch the Pip Club take place. And the traders call out trades. Can you take all of the trades? No, I can't even take all the trades. Today, yes, I could have. There wasn't a lot happening. We came out with probably one of the lowest days we've had. About 58 pips is all that came out of the total number of pips. How many normally come out? Someplace between 60 and 200. And so we're thinking that many people ought to be able to take out 50 pips most days by listening to these other traders trade. Now these are trades that are opened and closed during the hour to an hour and a half time that we're in the session. Sometimes we open trades, but they're still open when we close the session. Then you would have to manage those on your own as to when to get out of them, and many times that gives us well over the 200 range. Kim asked the question, how about lower than the 15-minute time frame? Yes, I do trade the 1 minute time frame. I didn't for years, but here's how I do it. I still use the larger time frame, the 1 hour 30 minute, to find the direction. Then I time the entry on the smaller time frame going in the direction of that larger time frame. Yes, you can use it on the day chart. Then I'll go to the 4-hour chart. Okay, now the 4 hour, you're starting to see, yes, I can make a trade here, I can make a trade here, and I can get out right here. I'm going to put a line as to where we would possibly get out right in here. Go back to the day chart. See where we're at on this 4-hour chart? Or the day chart? Now let's go to the 1 hour. Usually we use our time frames in increments of 3. If you start with a day, then you go down to the 1 hour. If you start with 4 hour, go down to 30 minutes, start with the 1 hour, you can go down to the 15. If I use the 1 hour or 30 minute, then I can use the bottom 3 as entry time frames. But let's go to the 1 hour on this one. This is the same place that we saw. So right here, where this exited, about another, I'll move that up just a little bit. See right up in there. So there's about an extra 40 pips you could have made by using that 1 hour as your exit signal rather than the day or 4 hour. But the same principle holds true. It broke right here, and there was a nice move, 150 or 160 pips. Now notice these bars right here on this 1 hour time frame, that's the beginning of a new day bar. Then you can see when this took off that day, this one took off in the middle of the day and moved.